Hi, my name is Eddie, and I've been investing in property and the share market since 2009. I have spent over 15 years investing in the share market, and in this video, I am revealing my biggest investing mistakes so beginners can avoid costly errors and start investing the right way. Just a quick disclaimer. The information provided is general in nature and does not constitute as financial advice. Please seek professional advice and conduct your own research before making any investment decisions. This is my first mistake. I started investing in individual stocks such as Rio Tinto, BHP, the big banks, and listed investment companies or LIC. I got up to 30 different stocks. I purchased stocks based on recommendation from various experts and my own research, and when I did this, I'll be very lucky to get 60% of them in the green. I have no idea about ETF when I first started investing in the stock market. I sold off those stocks now and I switched to buying ETF. And when I did this, all the ETF that I bought are all in the green and I'm making well over 10% per annum. Investing in ETF works because you invest in a bucket of shares, which means you are fully diversified. You can buy Australian companies and overseas companies easily because buying ETF is like buying individual stock. When you buy ETF that invests in overseas company like in the US or Europe or Asia, you can buy ETF that domicile in Australia. So you pay Australian tax like any other Australian investment. There are lots of ETF to choose from. There are good ETF that invest in the index, thematic ETF that invests in US tech companies, ETF that invest in top overseas companies, ETF that invest in companies that pay higher dividend than the average companies, to name a few. Mistake number two, I only invest in Australian companies. Australian companies are good. They're good dividend payment companies, but they don't grow as well as US companies such as Microsoft, Google or Alphabet, Apple, and Nvidia. You want exposure to overseas companies to get better return. You can get yearly return of more than 15% if you invest in overseas, and you can buy ETF that invest in overseas companies. Mistake number three is only looking for dividend paying companies, and I ignored growth. I've read a lot of articles about dividend paying companies that can replace my salary, which is good. But by investing in dividend paying companies, you're compromising on growth. The total return of an ETF that pays good dividend is about 10% per annum. But total return of growth ETF is more than 15% per annum. It's good to have both dividend paying companies and growth companies. Don't just concentrate on one over the other. Dividend paying is good as it gives you stability during a downturn, and growth companies provide better return in the long run. Mistake number four, I did not reinvest the dividend or distribution that I received. If you don't need the distribution income because you have just started investing, it is good to reinvest so you buy more of your favorite ETF. And over time, you will get even more distribution and even more total return. Mistake number five, I only started investing in my 30s. You have probably heard this before. If you invest in the Australian ASX 200 index, the average return is about 10% per annum. And if you invest $500 every month for a period of 30 years, you will get $1 million. Obviously, this is just a guide, and in reality, you may need to withdraw some of it earlier to pay for your large expenses. The mistake of what I did is, I saved my money in a saving account until I bought my first property. And what I should have done is to invest in ETF in my 20s after I got my first job. And this would allow me to save up even more and then buy the property. What I should have done is invest as early as possible and invest regularly to get into the compound interest train. Thank you for listening, and I hope you find this useful. You can check out my other videos on ETF investing. Please remember to do your own research, and happy investing.